All righty. Let's give it a minute for everyone to jump in. Looks like there's people still joining. Welcome, everyone. Welcome.
Hey, welcome.
Hello. Happy Friday.
It's good to see everyone coming in this Friday. Hope everyone had a great week trading and in life in general.
Yeah, it's been
one more
an
minute.
exciting first week.
Yes, we are excited to share our results with you guys. So it's going to be fun.
Tom, we should be at your house. You got all the good stuff. Beer and chips in hand, Tom says. Let's go. Ready for the show.
All righty. Well, let's go ahead and get started. For those of you who were here last week, you know a little bit about what we're talking about, but we will go ahead and give you a quick rundown that we have here of basically what the OA portfolio is. We started off launching the OA back tester about 2 years ago now. And over the course of that 2-year period, the initial, 1 3/4 years only had 0 and 1 DTE trading. And in the last few months, we've added longer duration trades as well as a few more symbols. Over that time period, many back tests have been run. And if you look over here in this top back test list, there is over 1.3 million back tests in the option alpha system that are potentially profitable. And so out of going through this huge list of 1.3 million back tests to try to find what's a good one to actually trade can be very time consuming and daunting. There's many repeats where people only changed one setting. So what we decided to do was create a curated list of many of the strategies that we found and we had actually traded live with good results ourselves. So that's what the OA portfolio is. It will be growing as well. There's several different strategies that we're currently testing out to add into it. We're looking to hear any ideas that you guys have for strategies that we can add. Inside this tool, what it has here is the name of the strategy, for example, the 0 DTE put hedge here, as well as each of the different variations of that strategy that you could potentially choose from. And you can select one variation from each of the different strategies. You could potentially select more than one if you really wanted to combine them. But the idea is you select one variation from each of the strategies that you want to trade based on the max drawdown, the return on the drawdown percentage or win rate or whatever it is, whatever criteria that you value. And you can combine them and create your own portfolio and then basically automate that. We covered how to automate one of those portfolios in the last week when we did this meetup. We'll do it again at the end of this call too. So what we've done is we've created a portfolio with 7 different strategies. We're calling it the Power 7 portfolio. 7 uncorrelated strategies. So each one of the strategies that is in this portfolio is trading something completely different, where if one strategy starts losing, it does not affect the other strategies at all. And that was one of the most important requirements, is that when one strategy in the portfolio is not performing well, the other 6 have the opportunity to make up for it. There's multiple symbols and DTEs covered. And we find that using these portfolios, we get lower and shorter drawdowns, and we get a much more steady profit curve. So this Power 7 portfolio, we've actually turned it on live using our own money. So we've started off by investing $25,000 into our own account, and we have another $25,000 in reserve as we learn and adjust and eventually lever this thing up so that we're leveraging more capital. Everything we're doing is going to be fully automated execution. Sometimes when I'm trading in my own account, I'm really tempted to go in and make manual adjustments or close positions early. We're really making sure that no matter what we do, everything that we're doing is completely fully automated. every week on Friday, or almost every week, depending upon if something comes up where we're not able to do it, but we're planning to do it every week now. We're going to come in and share our live results with you as we are on this call right here. So in a little bit, we're going to show our live results from week 1 teaser. These are our live results from week 1 right here. So we're going to tell you how we went there with full transparency, showing every position, what we learned. We'll get into that in just a little bit. So also just want to share with you this Power 7 bot that we're actually trading with. We've shared it live in the Option Alpha community. If you go into the community, and we'll share a link here yes, Eric just shared it in the comments. We'll also be sharing it live on YouTube later. But there's a link to this template if you want to try it. You can paper trade it, or you can jump in and go live with us. There's a clone button. And just a little bit at the end of this call, we're going to go through the process of cloning it real quick just to show you how to do it. So it's pretty easy. Any updates that we make to the Power 7 that we're trading, we're going to make updates to this template. You'll get a notification in the Option Alpha platform that we've updated the template. And on the actual bot screen in the settings, there's a button that says Upgrade Bot, which will upgrade it to the latest version that we're trading as well. Along with that, we've also created another variation of this same portfolios. We're calling it the Lean 7. It's the exact same 7 strategies, except we've tightened up some of the entry rules a bit, so it skips some days. A good example would be the Gamma Scalper, for example, only trades when the reward to risk ratio is greater than 300%. So the other one, I think, is 180%. So it trades more frequently. The Power 7 one did have a higher P&L. This one, we've lowered drawdowns considerably. As you can see here, the drawdown was lowered to 2,700 and still produced 165,000 in profit. It also uses much smaller position sizes. And there is also a bot template available in the community to trade with. So that's it for this little intro. We can jump in now right into the week 1 results before we answer anyone's questions. So let me pull up the actual bot here. All right, so this is our live OA portfolio bot that we're trading. It is live on optionalpha.com. Currently has 2 positions that are open, an iron butterfly going into tomorrow, which is the Gamma Scalper, as well as a gold long call spread that has been jumping up and down since we opened it. So this position was actually opened last Monday, or this previous Monday at 12:30 p.m. It's been kind of a roller coaster so far. Again, it's pretty long dated. It doesn't expire until September 4th. The high P&L it has made it to is $178, but it's currently about $100 in the hole. So this really is betting on a gold making a big move up in the short term. It's currently about 3% out of the money. And this last week, though, one of the things that was very interesting about the week is there was a lot of different events that prevented this bot from trading. So over the course of the week, it actually only traded 2 different strategies. The other ones made no trades at all. The 2 strategies that traded, other than the gold one here, was the Gamma Scalper as well as the 1:45 p.m. sandwich. So the Gamma Scalper, you look here, it won 1 position for $300. It lost another for $275, and it won another today for $310. And it's currently in one that it's up a little bit for Monday as well. So 2 out of 3 is pretty good. It also, the 1 loss was $275. So overall, it was a good week for the Gamma Scalper. The 1:45 p.m. sandwich started off the week with a bang, $510 profit. Had a smaller one here of $170, and then did not take a max loss, but took a loss here for $308. So it also won 2 out of 3. So those were the strategies that were profitable this week and the trades that they made. The other strategies, so if we look at the settings here, the flat fly scanner did not make any trades at all this week. And I have personally been trading the flat fly for months, and I mean, I really love this strategy. So it's one that risks a small amount of capital and has the potential to win a really big profit when it hits. And it has hit several times really big for me already. So it triggers this part of me that likes to, I don't want to use the word gamble, but we'll say who likes to take some risks that have a high reward. And this week was a real challenge for me because I turned off my personal flat fly bot in order to just trade the Power 7 as well. And every day that it wasn't trading, I had this itch inside of me that I wanted to make that flat fly trade. What if today's the day that it's going to hit? But in the back test that this bot is formed from, by using the filters that we're using in this strategy, we were able to increase the win rate up to 31% from what was originally a much lower win rate. And it also had significantly fewer trades, which reduced the overall commissions and fees as well. So I'm sticking to the strategy, even though I did have an itch to make some trades. And we were discussing it here in the office. I know several other of the team members also wanted to jump in too. So sticking to the strategy, this one did not make any trades this week due to a filter specifically for the expected move of the day. And what it's doing is the expected move is determining how much price movement is priced into the options for the day. And if there isn't enough price movement priced into the options for the day, then it basically is deeming that the iron butterfly isn't really worth trading and filters it out for that day. The afternoon paycheck also didn't trade this week. The CPI and PPI reports were on Wednesday and Thursday, which filtered it out. And the gold bull also had filters for, I think it was CPI as well, that filtered it out. So none of those strategies traded at all this week. Excited to see what happens next week though. And that was the result of our trading for this week. Think of what else, some things we learned this week. So I just want to say the new filters for the flat fly scanner basically saved me from making 5 trades that I would have made, and they all would have been losers. And instead, I didn't make any of those trades and I was able to control myself. So the new filters, they actually worked well. The filters around the afternoon paycheck over here as well, this afternoon paycheck bot, same thing. It filtered out every trade. It's basically trading a short put spread that's very near the money. And towards the end of the day, the price also reverted down some as well. So it turned out to be a good idea that it didn't trade that one as well. No put hedge this week either, didn't make that trade as well. And the market didn't crash. So that was also all great filters that save trades and save commissions as well. On that note of commissions and fees, one of the things for us to jump into real quick before we continue on is I'm going to pull up this back test. I'm going to bring it back into the tab because I opened in a new tab. So this week we did add a couple new features into the back tester that are super cool, especially for running this portfolio. Down here under the combined stats here, you can see this is the estimated commissions and fees for running these 7 strategies in this Power 7 portfolio since the beginning of 2023. So over all that time, if we were trading with TradeStation, which is what the fees are currently set to, TradeStation's fees, we would have paid a total of $7,100 off the top of this $287,000 profit in commissions and fees. So this is a really good thing to have insights into. Some of these strategies, when we looked at the older versions before we made it a little bit slimmer on how much it trade, like for example, this flat fly actually only made 166 trades and filtered out 740. But the original version that I was trading of this strategy made like 500 or 600 trades here, and the total amount of commissions and fees was huge. So in this version, you can see total commissions and fees were $1,226 on the $33,000 of profit, which is way better than what they were when it traded much more frequently. So it's really great insights to be able to see this. I'll show you as well. You can click here. The trading fees are different depending upon who you're trading with. So you can click here to add additional symbols if you want to. Assignment fees, so TradeStation has none, but if you were with Tradier on the default plan, you would make it $9 here, or if you're on the Pro Plus plan, like our other account is, you can go here and make it $5. Each one of these can also be customized and how much it is for other symbols as well. We are currently doing a whole slew of research to compile all of the different fees that each of the brokerages are actually charging. We're also reaching out to them to find out if there's any that we haven't found. For example, there's some newer ones there's a new one that just came out on July 1st. We want to see how the brokerages are applying that as well. What we want to do is within the application, we want to have a box up here where you can pick an account. Basically, you come in here. This view will eventually become the custom view, right? And then, but you could come in here and just select Tasty fees, for example. And if you do that, then we will have calculated what all the fees that you're going to be charged by Tasty for the individual contracts, because they have very specific rules like $1 per contract to enter, capped at $10, and things that we just can't capture in a UI like this. So this will be the custom one, and you'll be able to select the different ones that we'll calculate based on each of the different brokerages for you. We'll also be adding that functionality into paper trading and also live trading in the bots as well. So we're working on that. That's something a lot of people have asked for. We want to make sure we're providing you guys with all the insights you need in order to be profitable. And we realize how important it is that we calculate these commissions and fees into the results that we're having in order to truly see how profitable we are long term. So we're looking forward to getting that launched. Trying to think of what else we want to cover in here. Eric, did you have anything you want to jump in, or Steve? What about you guys? You run into any challenges this week?
Well, I know for me, it wasn't necessarily a challenge, but just like you, that fear of missing out when we're watching the bots all week and nothing's running. It was a little frustrating personally, just from a trading perspective of wanting the bot to do well, wanting to see the positions hit. But I think in the long run, it'll be a great thing, like we've seen from the back tests. The reason why we have these filters is for a specific reason. And so I think this week, especially with CPI and PPI, I think overall it was a good thing that a lot of these didn't run. So I'm excited to see what happens next week.
Me too. Yeah.
Yeah, agreed. Keeping an eye on things and watching them get filtered. But to Jack's point earlier, when you maintain that overall total P&L through filtering, but you're reducing your trade count, you are in essence making money in the big picture, because you're cutting out massive amounts of commissions and fees just to get to the same finish line. So when you look at it big picture, you're saving money by missing out on trades. And I think we all think of bots and zero DTE, like trade as much as I can, but that's not always the most efficient road to profitability. So yeah, and somebody mentioned it earlier, I had a couple trades earlier in the week that didn't fill live too, so that does happen. I think I had the standard slippage in there as well. You can always increase the slippage. If you do that, I would recommend putting that through the backtester too, to see how that impacts overall results. But all things in trading, it's always kind of a little bit of a give and take. So if you want to be tight with your slippage, you might miss some trades. If you want to loosen it, know that you might be giving a couple dollars back to the market. So it's just kind of what you want to prioritize, filling at a price or filling in time. So I wouldn't stress about not getting filled. That's part of the game.
Yeah. So for me, I also what I do when I'm generating these bots from the back tests is I typically go a little bit beyond what I'm allowing for, or what slippage I'm putting in the back test, assuming some will feel better, some might feel a little worse occasionally. And so, for example, on the GLD ones, in the back test, I think I'm adding 4 cents of slippage, but in the live market, I'm not seeing that much slippage most of the time. I'm filling maybe 2 cents, something like that, because some of them are only 4 cents wide. if you actually look through the positions in those back tests, sometimes it's filling at the bid or the ask because the slippage is taking it all the way to the other price. So, but I'm willing to sometimes take 5 or 6 cents if that's what it needs to get out of one of those positions, for example, near expiration, where I don't want to hold it and end up getting assignment fees, you know. So one other thing we added that I did not show here that was a result of a discussion with some traders in the community. Our longest drawdown calculation that we were using here was specifically related to these drawdowns here. So if you look here, max drawdown periods, which is the number of days that it took for it to go from the peak, like a peak profit level, to a new low before it came back ultimately. And so this date right here is measuring the time from the peak to the low. But what was brought up in the community is another really great thing to know is how long did it take it to recover and make a new high? So like, for example, if it was at $10,000 and you drop below $10,000, what we ultimately want to know is when does it come back above $10,000? So we're back in the profit zone again. And this longest drawdown calculation now includes the entire time between when it started to go into the hole and when it made itself back up to hit a new high. And the visual that we've created right here, the idea is to give us all the information we really need to see what type of drawdowns that this strategy ultimately has. So if you look at this one, this $4,000 drawdown lasted 86 days. And it started on April 29th, and it took it 33 days to drop down to the low, which was 277K worth of profit. And then it took it 53 days to recover and break a new high again. So this information here is giving you kind of a very detailed breakdown of what the drawdowns look like over time. So you can see this one here where that was 43 days. It only took it 7 days to go from a peak to a low, but then it took it 36 days to recover all of that money back. So this is really cool little view and breakdown. It's different for every strategy. So if I was to come in here and say I select, which let's see, flat fly will probably have some pretty interesting ones. So if I look at it, some pretty long recovery times here once it starts dropping. This one's nice, but yeah, the idea was to have a visual of you know, how long does an actual drawdown take for it to make a complete comeback, and then you know, break that up into the time it took for it to fall versus the time it took for it to get to the new high again. So cool. So, as I promised, let me jump over here real quick, and I'm going to come over here. So if you haven't seen this topic, we're going to share a link to it in the comments as well to this OA Portfolio Live event. This is from last week. This has several other strategies or several other portfolios that are basically just variations of this Lean 7, where a few of the strategies have been taken out. You're welcome to run it without any of the strategies. I saw some people taking the Gamma Scalper out of it. This last week, the Gamma Scalper was the one that traded the most. So if you would have taken it out of it, one, your profits would probably be lower, definitely be lower. But number two is it wouldn't have traded as much. So all 7 of these strategies together, you know, obviously the goal is to have 1 strategy or 2 strategies or 3 or more winning when other strategies are losing. So the more strategies that are in there that are uncorrelated, the greater the chance that that happens long term. But what I wanted to show you here is this Power 7. If I come here and let me get it back on the correct tab, and I wanted to clone this, I would click here. OA Portfolio Power 7. You could select whatever account you wanted. I'm just going to leave it paper trading for now. Say I give it $10,000. And the max drawdown on this was $4,000. I'd probably want at least $10,000 to start, just to make sure that I have a little bit of cushion in case it does a big drawdown. In order to get it running, you basically click clone, go to the bot settings, turn automations on, and then let it trade. So that's the process in order to trade this strategy. If you have any questions about how it works, it should have some notes here, but apparently it doesn't. So we're going to have to fix that, because I put in a whole section of notes so you could see what it was all about. Apparently they're not transferring. So we will get that fixed. So there's some notes in there with like the back test that was used. So you can see exactly how we came up with creating this bot as well. What was the other thing we were supposed to cover at some point too? There is a Lean 7 version of this too. So come over here, that you can also do. So right here as well, bot template, you can clone it, works exactly the same. There's one other thing we were supposed to discuss. Well, I'll remember it. Let's go ahead and hit up some of these questions, guys. Let's see what we have here.
A lot of people are asking about the allocation, especially for the Power 7. What would be a suggested amount?
Yeah, we really can't do any trading advice around that, because if I'd be really adverse to giving you, say, you should risk this. It really is up to you. We are putting $25,000 to start, which we believe is way overkill. The back test, when we take a look at it here, get it back on the correct tab. If you look, the max drawdown is $4,000. So that doesn't mean $4,000 is enough money. And if I have $4,000, I should go for it and try to win $287,000 here. That might work. Do you have the right timing? You know, if you hit one of these bad boys right here, right out the gate, it could be amazing. But if not, it could be a bit of a drawdown. And if that happens, this is the most it drew down in this period, but there could be a period with a drawdown that is bigger than that, with something that we really can't predict that is going to happen. So if I was trading this, which I am, I would want to have at least $10,000, 2.5 times probably the max drawdown here, but maybe even a little more, especially considering the overall commissions and fees that, granted, this is across 3+ years, about 3.5+ years. So looks like about, $2,000 per year worth of commissions and fees. So I would throw that in there as well. So we have a lot of cushion. We just want to make sure that we have a chance to run it. Have faith that running these strategies long-term is going to produce a profit. And we want to make sure that we have the capital to stay in the game in order to get to that promised land. So that's about all we can recommend as far as a good allocation that you should set. Currently, Ed says he's currently using 1-minute scans, but he wanted to know what would happen if he was to set it to 5-minute or 10 minutes. You definitely would probably miss a lot of trades. You could potentially try it though. You could also test each one of these strategies at the different 5-minute intervals and see how the results were as well. There's really no way to do that automatically right now though. It would definitely have a difference in the overall results, I think, than running 1 minute. Can you show the full screen? That is the full screen. Is it getting cut off? What is your recommended allocation for the lean version? I would do the same thing here as the Power 7 with the lean 7. You can see the overall drawdown was $2,700. I can't recommend anything to do, but I would say 2, 3, 5 times that would be ideal. So obviously that's a humongous range. Oh, is the screen too small? Maybe I can go a little wider. Is that what you want? Is that better? So I see you guys published the version 2 of the Power 7. Do you intend to publish updates to the other portfolio sets as well? Lean and Power 3 to 7. We currently only have 2 bots out there, the Lean 7 and the Power 7. If you want to run one of the other strategies, you could always just turn off the scanners. So for example, the Lean 4 has 4 of the 7 strategies is what it basically has. And so you can choose which 4 you wanted to have in order to run the Lean 4. You don't even have to run the ones that we include just by going into the bot itself. So I'll come over here and by turning off, for example, 2 of the different scanners there, you could go ahead and run whatever you wanted to. Show the metrics, please. Not sure what that one means, but if you mean the backtest metrics, they're right here. There's also links to these too if you want to check out the metrics as well. There's lots of different metrics in here that you can see. Something else we added since the last video, if you haven't seen it, when you combine these different backtests together, sometimes there's some leg collisions. So for example, one position is trading a long call and another one is trying to open a short call in the exact same expiration and strike. That would be a conflict. You can't have both of those open at the same time. So in the original version that we did last Friday, it filtered those out automatically, but you really didn't know when it happened or how often it happened. In this new version, earlier in the week, we released this right here, which was suggested again by one of our awesome users. So thank you for that contribution, that we basically give a breakdown of when those conflicting positions happen. And so we basically created this view. You can see this position here had a 39.75 long put, which conflicted with test C's 39.75 short put. So this position right here was not opened and was filtered out of the back test results. So this gives you a little bit of transparency into exactly what happened when it comes to like conflicting positions as well. There we have notes. So regarding adding the ability for these things to execute at specific seconds, we don't currently have any plan to do anything by the second. By the minute is definitely as granular as we're planning to go. What I would say regarding the amount of like trading activity and stuff that people are making in the Lean 7 here, these are all trading like one contract typically. Sometimes there's 2 contracts, as you can see here. The amount of volume we're trading in these is so low. We're not very big players. If you look at the amount of 0 DTE volume, for example, in SPX on any given day, the amount of volume we're producing isn't that significant at any one of these strike points. And also all these trades are split up at all different areas along the SPX legs as well. So it's still too small to see. Just want to, can you, are the take profits and stop loss of each bot the main exits, or are the bots intended to offset each other? If so, what is the overall exit strategy? Matt, you're welcome to take a look at it. Most of these positions, for example, flat fly holds until expiration, 1:45 p.m. sandwich holds until expiration, afternoon paycheck holds until expiration. Overnight Gex scalper takes profits at 15% or $300, whichever comes first, and also has a $30 touch. So it's $30 wide. Basically, if SPX price exits the wing width, then it closes immediately. It only does that though on the following day, not on the original day that it was open. Gold long call spread, Gold Rush holds until 1 hour before expiration. The long put spread here holds until expiration, and Gold Bull 1 DTE exits right before expiration as well. So not much exit strategy is needed, not really any risk of slippage on exit as well. no stop losses for sure. We don't really use those very often. The only one that has anything like a stop loss is the overnight GEX scalper, which has a 300 touch, 30 touch exit. Started Monday AM first thing. So I guess one of the things I would ask is, so we saw, I think, 6 different positions that were traded over the course of the week. Yeah, so should have been 6 positions traded. This one too, just so you know, this one was a little frustrating. This one happened on the 13th, and it had a chance to exit at a better price, but this didn't fill and ended up moving further in the money and taking a bigger loss of about $100. So this was one that definitely slipped from where it could have gotten out. So if you're trading the lean 7, which might be the people who are saying that they didn't get too many trades, the lean 7 is much more strict in how it enters trades. So if we look over here, so this is the lean 7, and for example, the GEX scalper right here has 229 trades. If I go to the power 7, the same GEX scalper has 501 trades. So that's significantly different. And some of them are like that. This one, the GEX scalper here, is looking for 180 reward risk. This one is looking for 300% reward risk. So those are very different. So the lean one is definitely filtering out more positions. It has a more strict entry requirement for many of the different strategies in order to minimize drawdown and capital requirements. John Ewing, no put. There is put hedges that they're happening on Wednesday and Thursday, which is historically has been when the market falls more consistently. The other hedge is the gold long call spreads. So there is a bit of correlation historically as well with gold going up when the market's going down. So those are the 2 different hedges that it's currently hedging with. But just to throw in there is these 0 DTE SPX positions, for example, the flat fly or the 145 sandwich, are not like linked to any type of market regime. So the flat fly is not doesn't profit because the market's a bullish market or a bearish market. It profits when the market ultimately stays flat on the day, which happens frequently in both bull and bear markets. Same thing with the 1:45 p.m. sandwich. What it's basically doing is opening 0 DTE right before 2 p.m. And if you look at the 0 DTE research that we published at 2 p.m., options prices that are getting ready to expire plummet very rapidly. So there's a vested interest in the market staying around the current level that it's at, which is where I believe, or why we believe, the 1:45 p.m. sandwich works so well. So if someone asked to show the bot dashboard again. So this is the dashboard. 4 wins, 2 losses this week. Overall, $707 of profit. Profit factor is pretty solid. It's obviously still very early, so these stats are hopefully we'll get some more action next week than we had this last week. Matt, when will commissions and fees be available for all bots? We don't know when it's going to be available for bots. We just added it for backtests, and we have to research what all the different prices are at all the different brokerages. So we're doing research around that, and we're looking to have it added here in the near future, but we don't have a timeline for it yet. Allocations are awesome. All righty.
Jack, a lot
Yeah,
of folks
so
are, oh, go ahead.
Tom chimed in here at Schwab about lower, if you have lower commissions, you'll always be able to use the custom option as far as like configuring what your custom commissions are. Go ahead, Steve. I'm going to read through some more of these questions.
Yeah, I've just seen quite a few questions about the GLD long call spread. I assume folks are talking about the overnight one. So just understanding the mechanics of that, since it's a long call spread, you're long around the 50 delta. The short is $10 above the long, I believe. So being long the option that's closer to the money, you would have to exercise that. If someone were to assign you on the short call, it's probably a pretty good thing because that means the position's $10 in the money on that day, which would be nice. Be a lot of movement from GLD. So, and also to keep in mind that exit option is 15 minutes before expiration. And I mean, I'm pretty sure, correct me if I'm wrong, Jack, but if it doesn't fill on that first try, it will continue trying in all of those increments up until the end of the day. Correct.
Yeah.
So like if it tries to exit at 15 and it doesn't get filled with the slippage, it would try again, 2 minutes later and then 2 minutes later.
Yeah.
So
exactly.
It's not like it just tries once at 15 minutes and if you don't get filled, you're out of luck. It'll continue trying if it doesn't fill. And if somebody is exercising that short call, that's probably a pretty good day for you because that long call is going to be nice and in the money.
Yeah, if someone executes the short call, your broker is going to execute the long call. Yeah. So.
Yeah. They won't let you go into the night short 100 shares of GLD because they'll just exercise your long call. So.
Yeah, I've had it happen before.
Yeah.
Yeah, you're in max profit territory. So if that happens, you're going to be taking a max profit anyway. So it's not really a risky situation.
Yeah.
The tab to set the different commissions is available on the backtest page itself. So where it shows you the estimated commissions here, you can click on this adjust fees. You can also, I think, click directly on the fees themselves. So this has details about how they're calculated, why they're calculated in the way they are, and also has links and some explanations for how you can figure out the fees that the different brokerage charges. And sometimes they have it hidden in the bottom of the page. So we try to, you can see fine print and light gray at the bottom. But there's also other places where they have more fees. So we try to do most of the legwork so you can figure out what it is pretty easily. Is there any option to adjust the number of contracts dynamically? No, there isn't the ability to adjust things dynamically. We were talking in the office about creating some type of unit-based system for entry and exit, but we haven't really come up with anything that works in the existing framework. But it's a really interesting idea because I would love to do something where if it's profitable, let's say this thing starts and it's profitable $10,000 and we want to double the units that it's trading, and so it's risking more. And then if it loses a few in the row, we could reduce that, but ultimately we didn't come up with anything that we wanted to do that would be fully automatic. The actual process for us to take this and create a new one, which was the Power 7 2X, for example, it would take me like, maybe 10 minutes in order to create a 2X version and publish it in the community. So we could definitely do something like that. It would be, I hope we get there, and I hope we get there in the very near future where we're ready to go 2X on the Power 7. So it'd be great. Ed, I agree. The Gamma Scalper did good this week. And yes, some of those trades had some pretty low reward risk numbers where it was risking like $800, but they were winners. So yeah, you really do got to trust the system. They're scary sometimes. Do we still have 50K? We currently have 25K, which we haven't really used any of. We're planning to see how it's, go through some of the growing pains in the beginning, figure out how it goes, and then potentially levering up to 2X and putting more capital in at work. The reason we chose these 7 strategies is when we went through to combine everything, none of them has any one position that's risking a very large amount of capital. So you'll see there's a short put spread positions that are in the portfolio options that we chose not to go with that are risking. Some are, it's like 5,600 on average per position, and then another one was like 9,000 that was set to 5 contracts. The amount of risk for one position was just too much for us, considering we have 25K or 50K in capital. We're not going to risk it. That one also opened 2 positions at a time, so we don't want to risk $10,000 in one strategy. It just didn't make much sense. But if you have $1 million in your account, that one that risks 2 $10,000 positions is very profitable over a long period of time. So definitely take a look at it. Adjust the position size based on net liquid. So that you could do something like that. I'm not sure how it would work in these combined strategies exactly. That would be very interesting. You could give it a try. I'd be very interested to see how it worked. But the percentage of net liquid inside of a individual strategy does not translate to the percentage of net liquid when you combine all the results together inside these type of portfolios. Basal, I also have noticed that as well. When you clone it and you are creating the different things here, for some reason, these right here, it's not creating the scanners, so they only run on Monday, Tuesday, and Friday. It actually runs them every day and then has a check within them to see, is it Monday, Tuesday, or Friday? Not sure why it's doing that. I assume that there's a reason behind that, and I have a note to check into that and see why those scanners aren't configured with the day of week already. I believe there's a reason for it, but I just have to check. I'm sure someone can fill me in on that. So, but I do have a note to check on that too. It was a strange one. Joshua, if there's a new version of the bot and you can move the positions over. You can also move the position history over. But if you're actually trading the template itself, inside the bot section here, there'll be a template. And when there's a new version, there'll be a button that says upgrade bot. And you'll just be able to click that, and then it'll upgrade the bot for you automatically. Yes, build. So the back tests are now refreshed daily. We implemented some code that went live this morning that will rerun all of the back tests inside the OA portfolio every morning at 6 a.m. So they'll always have the latest data every single day. No, the number, there's no need to adjust the exit options. I'm only running the Power 7 live. The Lean 7 I'm actually running in paper trading just to see how it does. So, can you give a scenario where you would want to transfer position history? There were some people who started the Power 7 bot from the back test instead of from the template. And they were trying to figure out how they could transfer the trades they had already made, but they wanted to actually use the template itself. So, seemed like a pretty good ad. It's nice anyway to be able to transfer the position history from one bot to another. There's a lot of different scenarios where you might want to do that. What is the timing on the back test here? It's back to the beginning of 2003 when 0 DTE kind of became a thing. So a lot of the strategies are 0 DTE, that's why. Capital at risk graph go. So it's interesting, which brokerage is the best for this, TradeStation or Tradier? That's a really loaded question. It's very interesting. If you're willing to do the Tradier Pro Plus, it lowers commissions slightly. You're getting the you're getting 10 cents commissions on SPX with 60 cents pass-through fees. So you're coming in around 70 cents. And then there's a bunch of other clearing fees and stuff like that. Either way, they're going to be pretty close. With TradeStation, you have no assignment fees, which is pretty nice. I personally have seen great fills on Tradier personally. So I like Tradier as well. But I can't vouch for, they're both great brokerages and you can't go wrong with either one for sure. With allocating 10K versus 25K, are you limiting trades that would potentially make, or are all positions set to fit within the 10K amount? All will fit within that. If it ever goes beyond that $10,000 amount, it will turn off automatically. And any trade that takes it beyond the allocation will be blocked. How was the first week? The first week was profitable so far. So it's a good first week. We learned a lot. We saw a lot of filters in action, and we had to learn to control ourselves so that we didn't take manual action. So it was a good first week. Nick K, how is the combined bot handling the max simultaneous positions compared to running the back test with one each? It actually adds tags to each of the positions. So if we look at these positions here, you'll see each of them has a position tag on it. And when the automation runs for it, it checks in the very first thing that it hasn't already opened a position with that tag today. So that's how it's limiting it in a multi-strategy bot. If you were to, so the question is, can results be significantly different if the combined has multiple open with any one strategy, which could block another one from working? So for example, if any of these is a double open strategy, if you look here, I have this set to 10 positions at once for this one by default and 7 per day. So there's 7 potential trades that could be made here. Just so you know, this could easily be 6 because afternoon paycheck only trades on Monday, Tuesday, and Friday. And this one only trades on Wednesday and Thursday. So these two are opposite of each other. So it really can only open 6 in a day anyway. But Gold Rush can have 2 positions open. So it could potentially have 7 open at a time. But you can use these right here to control the overall number of positions that it can have open. The Gold Bull scanner here, if you look, also uses the tags. So to make sure bot has less than 2 positions, so it can have 2 positions open at a time. So it uses this to make sure it doesn't exceed that 2 position limit. Yeah, is it possible to add your own scanners and create a custom OA portfolio? You can't build out like a bot scanner with all the custom stuff that goes in a bot, but you can, from over on the screen over here, for example, OA portfolio, decide you want to add this one, this one, this one, I don't know, this one, we'll go to this one, and then create your own portfolio like that. And if you'd like to win $149,000 off of a $2,900 drawdown, which sounds good to me, then you click create bot and you can go to it. So you can combine these and create different portfolios different than the ones that we've created for sure. Oh, interesting. So they're saying what they're seeing right now while we're sharing the screen is 3 of us equal sized and the screen share also equal sized.
You should be able to minimize it on there, guys. If you kind of hover over.
No, it was already, no, it was maximized. I just minimized it. That's what I did right there. They shouldn't be seeing that.
No.
They should be seeing that.
Yep.
What exactly is making Lean 7 different than the Power 7? Hopefully you saw earlier, we just have additional filters on it in different position sizes. Great presentation. For a beginner wanting to get hands-on, what's the best first step? Definitely paper trade these for sure, and get involved in the community. Come in there, ask us questions. There's a lot of other people in the community that are super helpful. You'll run into a guy in there named Robert De Niro, who is a maniac and answers. Guy knows more about the platform than anyone else and is very, very generous with his time and energy helping people. We're really grateful to have him in there. So yeah, definitely jump into the community. Should we paper trade the template as is or start tweaking? That's up to you. You can definitely tweak some of these strategies. We ran lots of different variations on them to come up with the ones that we added in here. But you know, everyone has a different goal or has a different risk tolerance. And some of these that have a, for example, 2.8K drawdown, you could potentially add additional filters that would reduce that significantly. So definitely play around and try to build your own strategies. I think that's a great idea. I think we answered that one. How is the max risk in total lower than the largest individual strategy? So the reason it works in that way, so let me jump back over here. So if you look, the max risk, this is the most of the capital that was allocated at any point that was at risk. So it started winning from the beginning and it was in the positive the entire time. This measures the amount of actual capital that was at jeopardy at any time. Max drawdown is measuring, you know, obviously if you start at one particular point and it drops $4,000, if you started at the point where it began to drop $4,000, then you know that there's, you know, that could potentially happen again. And you know, you need at least $4,000 to survive something like that. However, in actuality, if you would have started in July or in January 1st of 2023, the most capital that it ever had at risk was $258. And it must have won its first trade. And then from there it was, you know, it did really well. I mean, look, we can look right here. Won $5. Risk 157, won 310. So I would imagine this trade put it to where it was risking after these that $258. That's probably what it was. The SPX, the paycheck today filtered a trade because the SPX sentiment is 100. I changed that sentiment is less than or equal to 100 and it took the trade and it was a winner. I suggest doing that change. Yeah, you should backtest that. So that's the entire philosophy of sometimes that's going to work, no doubt. But the entire philosophy behind that is if there's no puts anywhere above the current price, when it's opening one that's near the money, it tends, you know, there's a greater chance that those puts that short put spread can actually be challenged. And when you run the back test, which actually I might as well do it right now just to show you. If you take this afternoon paycheck, for example, I'll put it back in the original tab, and I click compare, and I click to add a version, and I do exactly what you just said, and I say, what's it? If SPX sentiment is less than 100, right? Less than or equal to, that's basically removing it. So if you say if it's less than, the highest it can be is 100, so it's always going to be less than or equal to. So what you basically did was remove this filter. So let's look at what that does. It should be super fast because there's no exits. Granted, it worked today, but if you look over time, what it actually does, you're going to see it drastically increases the drawdown. Well, not drastically, but somewhat. So definitely changes the dynamics of the strategy. Profit factors lower, win rate goes down, but overall much higher drawdown and lower profit long-term. So that's why it has that filter on it. Basically, there needs to be some puts above there for market makers to go try to wipe out, is the theory we have at the office about it. So there's is there any assignment risk on any of these positions? There's no assignment risk. So coming back over to the strategy, we talked about it earlier. All the SPX ones have no assignment risk. The gold long call spread 20 DTE, if it goes way beyond the short call end of that, there could be a chance that the short call gets assigned. But if it does, they're just going to exercise the long one, and you'll just get the long ones called away as well. So there's no real risk there. If the short ones are getting exercised on this one or this one, that means that this spread is a max profit. So it's not a bad situation. It's a great situation to be in. Does anybody, one thing I did change for this call was my mouse. I don't know if you don't hear the banging the whole time. Has it been banging or what? No? Hopefully not. All right, I think we're close.
I saw a good question there, Jack, about paper trading these, and essentially like what are some things to think about and look at when you're paper trading them. I'll just start. I say what I like about all of these back tests that's included in the OA portfolios is they are what I would consider realistic, right? They're close to the money. They're 0 DTE. They're SPX. You're not trying to scalp a bid-ask spread at 355 or something. So they have sort of a built-in validity to them, which we're seeing trading them live outside of maybe some filters and things. You're not depending on some weird outliers. So that's good. One of the big things when you're paper trading is just trying to create a realistic environment for fills and slippage and things like that, which is a good idea. And a lot of these have slippage filled in. I think the other big thing that I talk about a lot is just like your goal with paper trading is not to assess if something works from a profitable standpoint. Like running a strategy for 5 days or 10 days does not give you insights to whether or not it works, right? And we're going to keep doing these weekly recaps, which I think are really educational, and we'll probably see the portfolio have some really good weeks and maybe some down weeks, but there's always sequencing and timing risk with that. So I see a lot of traders in the other workshops say, well, even this week with this, I turned on a back test for a week and it didn't make money, so it doesn't work. When you're looking at a strategy with a 35% win rate, you're probably not going to be able to judge whether it makes money in a week. So when you're paper trading, you're looking at creating a realistic environment, and you're just sort of making sure that things are executing the way that you think they are. And it's a good way to see, okay, these are the types of trades my strategy is getting into. This is when it's filling. These are sort of some things I can expect day in and day out. But I just see so many traders get caught up with paper trading something for a couple of weeks and saying, oh, it lost money, so that strategy doesn't work. Use paper trading as a way to kind of understand the strategy, observe it, and then rely more on the back testing for how it is performed versus, trading something for 10 days. So that's always my soapbox. I'm always happy to jump on it, but just think about that when you're paper trading. Your goal is not to win money in a 5-day period. Your goal is to observe it and see how it's running.
Great advice. Yeah, definitely agree with that. The regarding the sequencing risk is if you look right here, I mean, I'm sure we can all agree making 287,000 off of a $4,000 max drawdown would be amazing. And looks like this line is a beautiful line that we would all love to have, even with these fees down here of $7,000. Well, what am I looking at? Where'd the fees go? That was interesting. I'll have to look into that. But this strategy had a drawdown of 86 days. So regarding what Steve was just saying, like this is an amazing set of things with a great profit line here, but it still had a drawdown of 86 days where it was not profitable for 86 days. So starting something up and running it for a month or definitely 2 weeks and saying it doesn't work is a surefire way to lose for sure. I think that's can lead to losses, because if every one of these strategies that all produce solid profit, if you only ran them at one point for 2 weeks and then turned it off, if they lost for 2 weeks, you would turn them all off at some point, a loser. So it's like locking in losses. The key is to stick to it long term. So we're going to be running this portfolio not for 1 month or 2 months, or we're going to keep running this for years, and we want to continue to evolve it. And we know that we're going to go through some ups and downs at various different points, but it's just like if someone was to get into the SPX earlier in this year and they traded it for 2 months when it was going down, they could say SPX doesn't work, right? But it's one of those things that you get into it, you hold it over time, and then it's going to have some times where it's not working, but then ultimately long term it works. So that's what we're looking at with this strategy as well. I see the one here about Pro Plus. Yes, we're using Pro Plus right now. We're also working on a TradeStation account as well. So we have 2 different accounts that we're setting up for the company. We have to pay for it. It's $35 a month for Tradier Pro Plus, and we get $10 commissions on SPX and $5 assignment fees. There's no deal currently that we can offer you that for free, unfortunately. Regarding TradeStation, does not use a long put to cover a short put. Yeah, most of them don't do that. That's only for calls. Puts are where they can give you the stock. Calls are where you receive it. So it's a little bit different. It works a little bit differently. I think we answered that one. We're not planning to bump up size anytime soon, but if we were going to, we would have to close open positions in order to do that for sure, Matt. So I appreciate it, Tom. We definitely believe the portfolios are definitely the wave of the future too for Option Alpha. I think over my own trading history over the past many years of working on this technology has been one where I started off trying to build technology that would make me a better trader manually trading, and then ultimately decided I need some automation, and then ultimately deciding I needed more visual tools, and then I needed an automated strategy, and then I needed to backtest that strategy, and then I was going to automate individual strategies, and then some of those worked and some of them didn't, and there was no way to really put all of that together into one cohesive trading strategy that I could see the results as a combination. And that's why we're really bullish on portfolios, because we're all trading multiple strategies. The ability to do that in a coordinated way, something that has us really excited. So I think we're about out of time here. Let me look and see if there's any other questions we want to run into. Webull integration is very close. We just have to test it. I know that we have one person signed in. If anyone wants to be a beta tester for Webull and you have an account, send us an email to team@optionalpha.com and we'll add you to the list. Also, if you have a public account and you want to help us beta test public, we have a public integration that's coming too. We could really use some people to help us beta test those. So definitely reach out to us at team@optionalpha.com. Matt, can you create an export option or summary of the bot parameters? So we have to run through AI. You can do that in the backtester. There's no way to do that in the bot parameters itself. You'd have to screenshot it and put it to it, but unfortunately, there's no way we can do that. All right, I think we are going to call an end to this. Thank you, everyone who attended. We really, really appreciate your support and for all the valuable information you provided us in the community this last week and over all these years. This platform would not be where it is without all of you. We really appreciate you guys and love you guys. And, we're looking forward to the next iteration of things that we're building. If you have ideas for ways that we can improve this, definitely jump in on those threads and let us know, and share your results. So there's some people sitting on the sidelines wondering if they should get in and start trading. If you're having good results, share it. We can all work together and continue to move forward. So it's been a good week. We're looking forward to seeing you guys next week. So thank you so much.
Perfect. Thank you, everybody.
See ya.
If we didn't get to your questions, if we missed some along the way, don't be shy. Just throw them in the community or email us. I know there's a lot of you, and we appreciate you all attending. And if we missed some of them, don't take it personally. We'll send them to us, and we'll get them answered. We promise.
I just saw there's this whole other section of questions on the side here too. I was just going through the normal chat. We did walk through some of these. So I just want to hit this one. Is there a write-up or blog somewhere that explains each strategy and the rationale behind each strategy? 4 of these are included in the examples. If you go to the optionalpha.com site, there's an example page which does have that. But we are working on that actively, and we are going to basically break down each one of these strategies, what's the rationale behind it and logic behind it as well, and we'll share that in the next couple weeks. So, all right. If we did not get to your question, please ask us in the community. We'd love to tackle it. All right. So thank you, everyone.